Good morning, trading world. It is September 30th, 2022, 8:39 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for trading the markets. Get ready for a wild day ahead. I have said we were going to have a bullish move on Friday, but I haven't felt the fear yet. It's been too orderly, not enough panic and fear. The Vvix has not reached the levels it should have, and the backwardation is still big. For those of you who haven't been following, backwardation is where I keep track of the VIX futures contracts. And in a normal circumstance, we would usually be in contango, and that's where the closer dated contracts would be here. The volatility for that contract would be down here, and it would get larger or higher as we go further out into the future, because usually the further you go out into the future, the more unknown things are, which means the more fear it is about the future because it's unknown. But right now we're in what's called a backwardation, where the fear is right here, right now. And that's why the volatility is so high in the contract that we're in right now. So you have the October contract higher than the November contract, and the November contract higher than the December contract, because fear is here right now. The other thing, it has just been too orderly for me. There's not enough panic, not enough fear. The Vvix is back and forth over the duck and cover line. And for those of you who don't know about the Vvix, that's the volatility of the volatility of the VIX, which is kind of seen where professionals kind of use to kind of track fear in the market. And there's a level at 110 where it's usually seen as that duck and cover level. And that duck and cover level, we've went over it, come back under it, and we're just kind of playing at this level, and nothing's happened yet. Give me a second. I'm going to try to bring up the Vvix so I can show you what I'm talking about. Okay, here's the Vvix, and as you can see, here's that line at 110 to kind of let you know where, when things are really crazy and fear is really up in the markets. And we're playing right at that level. Now, what's really fearful to me is that we're playing right at the beginning of this level, and we're already at lows on the year. So the kicker for me, or what stands out to me, is that professional money is kind of saying that nothing's really happened yet, which is another thing that kind of has me on edge. So if we've made it to this level, if we've made it to new lows this week, or actually yesterday, we've made it to new lows, and the professional money, the fear of professional money still hasn't picked up yet, something's really wrong, or we're really in for some rough times. So next, I know that the weekly outlook was bullish and stated that we should close above 367.95 with a possible retrace up toward the 379 area. But again, because of all the things that I just showed you, because of where the Vvix is, this just doesn't feel right. We do a big bear market rally, but we are playing on the edge of extremes. And something people seem to never remember is markets usually crash from the edge of extremes when people think it's time to bounce. All I can say is stay on your toes. Another thing to pay attention to is we have not really done anything too serious this week. We have a market maker's expected move of 12, we'll say, call it 12 and a half on the SPY. And it's the last day of the week, and we still have an expected move of more of right at half of that for just today. That screams at me. So gotta be prepared for a really wild day. And I know I keep saying this, I came in, the outlook that I did at the beginning of the week said bullish. And you have to keep your eyes open at moments like this where everything sets up to be a very explosive alternate thesis. So we have to be very, very careful because of how things are setting up. And I'm still not sure whether it happens today or whether we see further decline next week. But I just know there has not been enough fear. The VIX has not risen to a point that makes me feel comfortable that we can kind of back off and be bullish for a bit. So just be careful. Looking at yesterday coming into today, we have one of the largest order imbalances I've seen for the year. So however things start, it could go that way for a while because of the imbalance. We also have a pre-market report that would normally not catch my attention. It's not a market mover, but anything can be used as an excuse to reverse lower on the morning. Another thing to be concerned about is due to the currency manipulation I talked about earlier this week to fight against the US dollar. Remember, as the US dollar gets higher, we're basically exporting inflation to other countries because we're the reserve capital. So it costs other countries a lot more right now to deal in US dollars. So much so that Japan had to step out and support their currency with a capital influx. Britain has had to do the same thing. And what disturbs me about this, I've been using the dollar as that kind of fear meter that I would usually use the VIX for. And the dollar makes more sense, or up until this time made more sense, because it was a global thing that everyone ran to the US dollar. But due to this currency manipulation, that might be over. That US dollar may no longer be that indicator of fear. Instead, bonds could start to be the place where money runs to for safety. Last of all, it's the end of the month, and usually performing chasing fund managers are buying things that look good to fake the funk on statements that they send out to their clients. But in a strong bear market, that usually flips, and we get more selling of things to get them off the books to make those statements look good. And that could add to the point of making today a really rough day. With that being said, let's get to the levels to watch for the day. All right, here we are with the key levels of the day, and if you can notice, we have a huge range today. Starting on the resistance side, we have our jack resistance at the 364 to the 365 level. If you've been following, you know that this 364 is the upper edge of the major channel that we're in right now. And this could hold a lot of resistance trying to beat and get up out of there. So we could reject off of this a couple times. Our queen resistance level is going to be 366 to the 370 area. If we do get above the 69, well, we say 66 area, it could give us room to run quite easily. Then we have our king resistance level, which is 371 all the way up to 379. Now, for the support side, our jack support is going to be 361 to the 360 area. Then we have our queen support 359 to the 357 area. It could be that we find support here and kind of play off of this, but if things get really bad, we could go down and visit the king support area, which is 356 to the 350 area. And it's quite possible there's another major channel below. The major channel that we're in right now ends at 353, and if we break through that 353 level, the next major channel low below that is 342. The main thesis for today is bullish, closing above the 362.79 with a projected target high of between 364 and 379. However, the alternate thesis is bearish, closing below the 362.79 with a projected target low of between 361 and 350. Those current major channels that I talked about, the one we're in right now is 364 all the way down to 353. The next major channel below goes from 353 down to 342. Continue to be on your Apple Watch, not the one on your wrist, but pay attention to the stock, as Apple is the leader in all of this. As Apple continues to go, the rest of the market will continue to go. I usually give scenarios for the day, but today is kind of a really weird and going to be a wild day, and I only see two things happening today. Let me bring up the first scenario. All right, here we are with scenario number one. We fall out and go into consolidation early. Whether that fallout is to here or even lower down here somewhere, we're going to get some consolidation for a good while and then possibly take off like a rocket at some point later in the day. Probably just before lunch or during lunch, somewhere around that midday session, we could start to come out of that consolidation and take off. So that is scenario number one. All right, here we have scenario number two. We fall out a bit, start to consolidate, move a little higher, but instead of midday chop, we get one hell of a midday drop that could take us to new lows on the year with a very sharp V bottom shortly after, taking us back to or close to where we started and possibly a little higher. This will be very disturbing, and it's going to bring about that fear and panic that I have somewhat been looking for a while. That consolidation, or what's the word I'm looking for, that capitulation type moment that everyone has been clamoring for and seem to have forgotten about right now. So that's one of those things that could happen today. One of the things that I want to tell you about today, if you're not already positioned for it, there is virtually, it's going to be almost impossible to put on positions today to prepare for the volatility that we're going to see. Because you could buy a put, and if you're not extremely perfect in your timing today and putting that put on and taking it off, it's going to be almost impossible to see profit. And the put side is the easier side to play. The even harder side to play is the call side. The volatility in options today is going to be horrific. You can have things call completely right. Let's say you buy a call at the bottom, which would be almost impossible. But if you are able to do that and you buy a call and ride it all the way back up, you still won't see much or any profit because of the volatility that's going to get sucked out of calls today is going to render calls almost useless. So if you aren't already in positions, the only other thing that I can say, if you're not buying direct stock, is to use spreads to kind of play off the volatility a little bit. But volatility is going to be so high today that it's going to make it almost impossible to put in play positions that you put on today. As always, the most important part of being a trader is to protect the capital that you already have. And we do that by knowing and understanding the risks that you have on in each position and managing that risk in accordance to your account size. Be very, very, very careful today. As always, wishing you a positive trading day. Make it a great one.